Hello traders, it's 8:01 a.m. Chicago time on the 24th of July 2018. It's Tuesday, one of the most, or statistically the most volatile day of the week. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Seems like my mic's coming in a little hot today. Just let me know. So looking at overall sentiment this morning, allocations to risk, gold's teetering on unchanged. The leader today is the DAX, up almost 200 points, 1.55%, followed by the Euro stocks. The Europeans seem to be having fun overnight, leading the pack up. Overall, yeah, let's turn down the volume a little bit. Thanks for the feedback. Should be better now. Bit of an echo. Okay. There we go. Thank you. So looks like after yesterday's rally, the allocation is mostly to risk. This morning, as we come in, there have been a couple of decent pops higher. We just put in a new high on the overnight session in the ES. We'll go over that in detail in a minute, but just know that the sentiment overall is risk on. So let's start off by looking at what could interrupt our auction this morning. As far as numbers, we have services PMI at 9:45 Eastern, 8:45 Central for July. This is a prelim number. Not expecting too much movement off of it. Other than that, not seeing a huge disruptor. This morning, Richmond Fed is a low tier number. And for those of you trading the treasuries, there are some auctions today. So that's where we stand. Let's take a look at what we expected yesterday. This is what we were going for yesterday as the key plans. Scenario one, we were at the time of the trader bite, we were trading at 2,800, just right at the low of Thursday and Friday. And the expectation is that we would be responsive immediately back up to 2803, 2804. And we're likely to rotate down and out of this range to continue, as I said before, this topping formation to pull back. So that's a primary scenario. It looked that way at the beginning, and it changed. It became scenario two, pushing into, which was targeting, as this arrow shows here, targeting 2811.75 or so, 2810, with a pause at 2808, 2807. So here's what actually happened. So we open right at 2,800 on the nose, and we have a nice little opening swing. Open auction, just out of range. There's the opening swing, and we extend the opening swing down, so it looks like we're becoming initiative. We pull back. Where do we test? We test the prior low, 2,800, and a quarter several times. This is the first opportunity to get short here and look for continuation lower. But what we end up with is a double bottom, a local double bottom on the initial bounce low. And failure to continue brings in pretty good buying. Rotation of 6.5 points right there. And immediately, so that 6.5 points takes us into that 2803.50, 2804 area. Remember, from our designated initial failure right here. That's this exact area. Okay, So still looking for scenario 1. Okay, so push up to 2803, just as it's shown here, 2804, rotate down, and then continue scenario 1. And so there we have it. We pushed 2803. You see it right in front of you there, 2803.50. And I'm thinking scenario 1. So short again and look for the push through and then continuation down to hopefully the key figure below, 27.88 and a quarter. That's what I was looking for. It extends the low. So we have range extension after the first hour, after the initial balance is in. We have an extension down. This is the biggest rotation of the day. It's 7.5 points. You see it right here, 7.5 points. This pane here, this graph, is showing rotations. Rotations are very important. They give us an idea of who's likely in control and so on. So we extend down. So we extend the rotation up, we extend the rotation down. And for those of you who are at Convergent, probably saw the video update in the morning. And I talked about this being a sort of a megaphone formation, bigger and bigger waves. Not so. We extend the range down and we come right back into the opening swing and just dilly-dally before we start to push out and go neutral. So now we've broken the IB low and the IB high. We are neutral, and this is where, again, for those of you who are Convergent, where I said, be careful here. It is likely to continue to 28.10 from here. And remember, 28.12.75 is key from last week, a key top from last week. So next area up is value area high, 28.07.50, 28.08. It balances out in this area, and then at the close, it finishes up, and it finishes one tick below the 28.12.75. So what do we gather from this? We gather that short time frame traders were mostly in control. The profile with a neutral day, we finished on a neutral extreme up. Neutral extreme up. What does that mean? We poked below the first hour's low. We poked below the double bottom from last Thursday and Friday. We could not find initiative sellers, precipitous sellers, aggressive sellers, pushy sellers. We couldn't find those people. And then so buyers now were free to take up price and explore higher, and it's exactly what they did. And not only that, but they put in a neutral day. They forced a neutral day by breaking the IB high after the IB low, and then they finished at the high, making it a neutral extreme up. Neutral extreme up tells us that there's a high probability, there's a better than 3 in 4 chance that the overnight session is likely to continue higher. Next area up will be 28.18.75, the mid of the correction. And then the gap close. The gap close is at 28.21. So right here. So these would be the overnight targets. The last high in this area was 28.18 and a quarter, which was last week's high, marked right here. 28.18 and a quarter. So those would be the targets overnight on the extended session, but we actually pushed 28.24.50 this morning. So that's how the S&P rolled yesterday. Actually, that's too much range. Okay. So next we go and we look at our overnight. Overnight, where you are, my friend. Where you are. Speaking like Yoda. Here comes the chart. And we open up in the overnight session right where we close and immediately pop up to 1675. Really expected that to push to a little bit lower than that, and then the next push up would be 1850, 1875. The next push up gets to 1950, and then it starts to slide downwards, comes back to the open on the European Open, which occurred right here. European Treasury Open occurred right there. And then from there on out, we have a impulse followed by an impulse to 28.24. So yesterday's profile in the S&P right here, very thin. Some single prints left behind. No consensus. Clearly no consensus on value. Could not find an agreeable price. So buyers continued to buy to find those sellers, and they couldn't find them. And then the overnight session essentially saying the same thing. The profile is showing no agreement, no consensus on value. So the market is being led by buyers, and I expect that to continue. Now, the overnight inventory is mostly long, so we may rebalance a little bit on the open. We're opening in a gap, and it's likely to rebalance down a little bit, but I'm not expecting very much. So let's take a look at the plan for today. Fortunately, I have to keep this small because of the gap range. The plan for today, we are opening in new territory. Let's take a look at the composite real quick, just so we can locate where we are. At this point, we've basically taken back the entire sell-off that started out, the volatility and sell-off that started out in February. So here's our composite, the big picture. We've taken this back, and now we're gunning for this area up here. Okay, so the big volatility sell-off days like this day right here, oops, I overshot it, all that's been taken back, and we're starting to push through to the upside. So we're starting to fill in. So what's the key target above? Right here, the key target is the high volume node, 2835. That's the big area above us currently. Let's see. $28.35.75. That's the key area above. And then we have a gap above there starting at 28.48-ish, 49-ish. And that goes on till 28.60. So we're in some pretty strong areas to test. And we're showing quite a bit of strength. However, this morning, I'm looking for this to turn back. So I'm looking for an auction that tests up, becomes responsive, and starts working its way back down to 21. Okay. I'm looking for it to consolidate down here. I'm looking for this to remain open. We've kept our gap zones open, and then to push back up. So I'm looking for this overnight high to be taken out immediately, and then we start shifting into 27.75, 28.31, and making our way to 34.15. Remember that 35. So scenario 1 is responsive early, and then initiative once it tests lower. Scenario 2 is an open auction that drifts down into 28.16.75 and just holds steady right here, just sideways, basically resting. Yesterday was a bit of a rally day, neutral extreme. Today it tests up, and then we have a resting day. Now, with us being out of balance, scenario 3 and 4 have a higher probability of playing out, and those are open test drive down on scenario 3. So let's put that up. Scenario 3 is an open that immediately pushes up impulse down, test the range, back in the range, consolidate 2808, and then pop back out later in the session. Okay, so that's scenario 3. That's responsive drive down. Scenario 4 is the opposite. Responsive early. Let's put scenario 4. Let's make that a blue here. Scenario 4, responsive, open, test, down, drive up. Ooh, that's a horrible color. And then you have even more force on scenario 4 because it's a driving. Sorry about that. I'm not going to use that color again. I need light colors. So this is the mess that I've got on my notes today. Again, the key scenarios to open in an auction out of range, test up, drop, keep a gap zone open. In other words, fail to test 2812, 2808, get down to 2812.75, 2850, 2812.50, and then become initiative again, and then push up into the bottom of the, or push into the high volume node at 2835.75. That's the key scenario that is the most likely play of the day. And then scenario 2 is just a drift down that goes sideways for a resting day after yesterday's trading. We've been in balance for a week or so, and we've broken out of that balance to the top side. Short squeeze throughout the overnight session. Those guys are definitely struggling today and likely to continue struggling throughout the session. So I wouldn't overstay my shorts too much. Of course, it plays well with scenario 3, but still, trade what you see, not what you want the market to do. There's no point to try to impose your views on the market. It's just not how it works. This isn't your job. Your job is not to impose the views. Your job is to surf the waves as they come. Align yourself with the market. Good luck today, and I'll catch you tomorrow morning. Take care.